here we are at our very first rental property. How to deal with an audit. Yes, we got audited. Oh my gosh, freak out time. No, it's not. No, it's not. It's not really freak out time. So
I'm not freaking out.
She's not freaking out. I'm not freaking out. But when you hear that word, is it a 5-letter word? It should be a 4-letter word. When you hear that word, you get panicked, scared. Oh my gosh, it's going to be costly. It's going to take time. The IRS is up our butts about something. Well, it's actually not that big of a deal. And so we're going to talk about what an audit is, what we're going through, what we had to deal with, and how we beat it.
I don't know if we beat it yet, but I'm glad you're looking ahead to that. We don't know the outcome. We actually just had our audit meeting yesterday. But there are lessons in this, as there are in any, challenge in your business. And so I thought we would share them because this happens. This is the kind of thing that it happens. And so I thought to myself, okay, I don't like it. It's expensive to go back and get my CPAs to retrace their steps. But, like any challenge, I always ask, what is this trying to show me? So there are a couple of things that I have then learned and already changed in our habits, so I thought we'd discuss it.
Yeah, and first we should say, this doesn't have to be scary. As Tom Wheelwright likes to talk about, our great accounting team, and by the way, we have an amazing accounting team. We have a link below. If you go to morrisinvest.com/taxes, they've had hundreds of audits they've had to deal with over the years. They've never lost one of them, and they often say, look, when you have an audit, this is not something you should be scared of. This is part of the process. You should have answers lined up, ready to go, but this is simply an inquiry into something that the IRS doesn't understand, perhaps, about your business practices or dealings. And I'm sure you know plenty of businesses out there, and not one of them, I bet you if you talk to a business owner, not one of them is going to say, nope, I've never had an audit. I bet everyone you know has probably had an audit at some point. Even
the president has.
My mom had an audit. My mom...
Did she?
My mom had an audit. My sister had an audit. People have audits all the time.
One point Tom makes is that if you're an entrepreneur of any sort, right? You give people back rubs for a living, or pedicures, or you invest in real estate. If you are accepting money in your own name and you have not incorporated, you raise your risk of an audit by, I think, 30%.
So again, set up an LLC or some other business entity.
Your business in some kind of entity.
Yes.
And so I think your mother was investing in real estate in her own name, and then I think that might have been the result of that. I'm not sure. I'm not going to talk about my mother-in-law. I'm not completely sure. You did. You started talking about her.
You told.
I didn't say she made mistakes.
Okay.
Anyway.
I don't know the subject of her audit, but anyway, that was even my mom had an audit. Most people have to deal with audits in their lifetime, and they don't have to be scary, and you shouldn't have to be worried about it. And one point that Tom Wheelwright makes in his amazing book, Tax-Free Wealth, if you haven't read it, link below, you've got to read it. It's a game changer.
But a beach read.
But he does talk about how, he's not scared of an audit at all, and most of the time they'll invite the auditors into their office. They get them nice food, they sit down and they talk with them, and they develop a relationship. After all, there are human beings that work at the IRS. And what does the IRS people say when they come in?
Well, in his book, he tells stories about how one woman said, oh, I thought you were going to make me cry, or I'm used to being treated like doo-doo by clients when I come in. This is the auditor speaking, because most people treat it like being pulled into the mean principal's office. And that's not necessarily the case. It's just you've submitted your homework, your taxes, and the teacher says, I don't know about all this. Let's go through it together. That's all an audit is. It doesn't mean they're ready to punish you. It doesn't mean you've done something wrong. It means there are things about this that they're not sure about. So a couple of things that we then changed in our protocol since going through this is organizational, to be honest. For the most part, I was going to say every business, but no, every person, every human biped should be acting as if they might get audited all the time, so that you're always ready and always organized. I know it's a lot to ask. Not everyone loves organization like me. I can't believe that would be the case, but not everyone does.
Right. And
not everyone needs a label maker.
No, and to be organized, let's be honest, we were incredibly organized. So imagine, as organized as we were, with our taxes and everything. Everything like handwritten receipts, making sure that everything's being cataloged. We still had to deal with an audit. And they just wanted some clarification on a few, I think like 3 key areas or 3 questions that we had answers for and provided them, and hopefully should be resolved pretty quickly.
But there were a few times when I had taken owner draws in order to do something specific with that money. Now, for instance, your company makes $1,000 and we, Clayton and Natalie Morris, want to use it to buy, Clayton wants his, I don't know, a personal expense. Like Clayton wants to go clubbing at night, right? It's not a business expense because he does that a lot.
I love clubbing.
He likes raves. And so he says, I have to join this rave. Moby is going to be the DJ, and I have to go, and it's $500 ticket. Okay.
Were you straight out of the 1990s with your rave and Moby reference, right? I want to go listen. I want to go listen to the Bourne Identity soundtrack at
Spun Live,
right, by Moby,
down on the beach somewhere. Okay, so Clayton says I need $500 to go to this rave, and I say that is absolutely not a business expense. I'll take a draw from this company that has money, and then I'll give you that $500, right? Because that's not a business deduction. Okay, so we take that $500 draw, and then I give it to you, and you go off and have a great time. So what I had not done when I took those draws is I just marked them owner draws. I didn't mark them why I had done that. And so there were a couple of times when they said, why did you take these owner draws? Or did you take them as a loan and pay yourself interest? And I wasn't prepared for those because I hadn't marked it as specifically enough. Now, what I usually do is when I make some kind of transfer like that is I print the confirmation page, and then I go through, I use a Mac, so I go in preview, and I just add text in red of what was the purpose of that transaction. And I needed to be honest, to be more specific.
And this was in an entity that we hardly even used. So this wasn't even like our main business. It was like a small entity that only was around. We set it up and then we dissolved it because we didn't need it.
Yeah.
So it was like, there was like a few transactions out of this one entity that hardly had any transactions at all. And so they wanted clarification on those draws. So one thing that I know that Tom Wheelwright has mentioned is that the recent the recent head of the IRS over the past few years is, I don't want to say audit hungry, but how did he describe him?
He is very specific.
He's very specific, and he wants notes. Like if you get a receipt for something, make sure that there are notes for what that meeting is. So when we go out to this lunch a little bit later today, and we're going to sit down and have a business lunch, we will use our business credit card. Mm-hmm. We will take notes on that receipt as to what we were discussing, because we like to do this like once a month where we have like a business lunch together or a business dinner, and we kind of go over our books and things like that. So that's what we'll be working on. But you have to write that down, right? What's another example of being specific?
Well, for instance, and a lot of times, so you'll get the itemized bill if you go somewhere. This is a little tip specifically about restaurants. And the bill will say that you had like a hamburger and I had a hamburger, and then some drinks, right? And then we say Clayton and Natalie went to lunch and we had these things, right? There better not also be 3 Happy Meals on that,
because you also bought for your kids 3 Happy Meals.
Because your kid, that's a family dinner. Can you make the case that your kids are at your business expense? Like they want to see the itemized receipts, not the one where a lot of times you give them the credit card and they come back and the slip has the total and then where you put the tip. That's not itemized, right? So be more specific than that. And again, every time you move money, you take a draw, write as much specifics as you can on it. Either handwrite it, or I keep everything in a Dropbox organized by year and then month, and then I go in and I just write it in red, so it's there for me and it's there for my accountant. Now if I'm moving money from one account to a next, I usually have some kind of checkbook balancing, and I balance the checkbook, so I can go in and they'd say, why'd you move that money in April? I can go into April's tab and say, oh, that was for this, right? So now I'm just like going the extra step, because it's annoying to not have answers for that when you're that organized, right? So everyone can always do better.
Right.
And Clayton can do better about handing in his receipts too.
Yeah, I'm not good with handing in my receipts. I'm not. But
To me.
yeah, and you have to have a system, and it's very important to be able to have these systems. So maybe you use Dropbox like she does, maybe you use iCloud Drive like I do, maybe you use Google Drive. The point is, use one of these where you can catalog and keep these things in a bucket and organize it and go through and spend that time every month making sure that these things are organized. And look, let's be honest, you're not going to remember this stuff. So you had a meeting, you didn't write it down on your notes. A week from now, you're like, oh, I'll get to it a week from now. You're not going to remember. So that's why you should definitely keep notes and take them immediately after that meal so you have an accurate representation of that.
Here's another example of something that I just did.
Okay.
You want another example?
I was going to say, yeah, like an ATM withdrawal. Like, right, if you take,
that's what I was going to say.
See, if you take an ATM withdrawal, you get that slip out. Why are you taking an ATM withdrawal? Handwrite, and this is something specific that the IRS looks at. Right? Tom makes the point, you've got to write on these receipts because the IRS wants to see those receipts and notes taken about
Otherwise,
them.
you just took cash out and then you can go to your rave, right? You can't take cash from your business account and then go to your rave unless you are a DJ, right? And I think you know us well enough to know that there's no business reason that Clayton should be going to a rave. It's only personal, right?
I only want to go see Moby for personal reasons.
Well, so I just went to the ATM because my kids are in soccer camp. And I wanted my kids to pay for their own soccer camp because they make a salary. They've got money for that, right? But they don't have an ATM. And this soccer camp only took cash. And so what I had to do was go to the ATM with my personal credit card and take out the cash. And then I marked it on the receipt. This is summer camp cash. And then I went and made a transfer from their checking account into mine to reimburse for it so that that money matches, right? So then it's clear I didn't just take money from my kids' account because they're not taxed. They're underage and they don't make enough. And so their bank account is full of tax-free dollars. So I can't just take it and then myself go to a rave, right? That's not right. I can't use it for myself, but I can use it for them because they want to go to camp. So that's exactly what I did is I wrote it on the account, then I went and transferred it, and I saved the transfer confirmation, and then I stitched them together using Preview.
Holy smokes, that sounds like it's an absolute nightmare of a headache.
But I like to do it.
So the point is, I know it sounds scary, but you watch this show to build financial intelligence, right? And we want to prevent you from having to deal with an audit if you don't have to. Or if you do get audited, which you might.
Just be ready.
Just be ready and be prepared for these because these are the answers that you'll be able to provide to the IRS, and they'll say, okay, thank you so much, moving on.
It's just tiny little things, right? Like write that on the receipt. Then I paid for summer camp with tax-free dollars. That's money I didn't have to make in order to get them into camp right now. So we could talk to you, right? But those little things, again, the Jim Rohnism is what's easy to do is easy not to do. Like just do tiny things and then it won't be so stressful.
So what tools do we use to scan all these receipts and everything? Well, we actually did a video on that exact subject, the apps that we use to run our business. You got to check out that video because I think it will help you tremendously to keep yourself organized. Now go out there, take action, become a real estate investor. Even with some of these headaches and audits, it's still the #1 way to build wealth. We'll see you next time, everyone.